Welcome to this explainer. Today we're breaking down the tech and the potential financial future of Lineia, which is a major Ethereum Layer 2 powerhouse. You know, crypto has always heavily rewarded early innovation. And right now, Layer 2 scaling is arguably the most fiercely contested battleground in all of Web3. So we're going to dive deep into the source material to analyze exactly what the future could hold for Lineia as we fast forward to the year 2029. Let's get right into it.
We're going to anchor our whole exploration today around one super fascinating hypothetical from the research. What exactly happens to a $250 investment in Lineia by 2029? Now, why $250? Well, it's a pretty accessible amount for the average retail investor, right? It's the kind of money you might drop on a really nice dinner out. Setting the stakes there makes this highly relatable, and it gives us this perfect practical lens to view the massive scale of potential growth and, of course, the very real risks in the blockchain space.
To get to that answer, we've got a quick roadmap. We'll cover what Lineia actually is, the drivers of its future growth, some 2029 price scenarios, that actual $250 investment test, and finally, the crucial risks to consider. All right, Section 1. What is Lineia? Let's talk about Layer 2 scaling. Before we can even think about future valuations, we absolutely have to understand the fundamental architecture here. Specifically, a concept called zkEVM. According to our source, Lineia is a Layer 2 network built using zero-knowledge technology. Now, if that sounds like complete gibberish to you, think of zero-knowledge tech like a bouncer at an incredibly exclusive club checking your ID. They just need to verify you're over 21. They don't actually need to see your name, your home address, or anything else. It basically proves something is true without revealing or processing all the underlying data. For Lineia, this means it can bundle thousands of transactions off-chain, making them infinitely faster and cheaper, all while remaining perfectly compatible with Ethereum's massive existing infrastructure. Pretty cool, right?
So Lineia essentially aims to be the ultimate express lane for Web3. I mean, if you've ever tried to make a simple Ethereum transaction during a massive bull market and got hit with a ridiculous $50 gas fee, you know exactly why this is so necessary. The goals here are straightforward but absolutely critical. Slash those transaction fees, dramatically speed up confirmations, and massively improve overall scalability. But the real kicker? It pairs those vital upgrades with full Ethereum compatibility. That creates a vastly better user experience for both the developers writing the code and the investors trading the assets. Because as blockchain adoption goes global, solving these exact congestion bottlenecks is what ultimately creates immense sustainable value.
Moving on to Section 2, the drivers of future growth and future catalysts.
The thing is, great code simply isn't enough on its own. Lineia needs a powerful catalyst flywheel to truly thrive. Think of it like a chain reaction. First, it requires widespread developer adoption to build highly useful decentralized apps, or dApps. That developer activity there acts like a magnet, attracting institutional backing and serious capital. Then, that capital fuels the growth of the broader DeFi and Web3 ecosystems. Add in strategic partnerships and the massive tailwinds of a favorable crypto bull market, and boom, that flywheel spins faster and faster. When all these multiple catalysts align perfectly, you have the exact recipe needed to crown a dominant Layer 2 network by 2029.
Okay, let's get into Section 3, 2029 price scenarios and scenario analysis. Now, predicting future prices is, of course, completely impossible, but scenario analysis gives us a really useful objective framework to look at. The data here outlines four starkly different futures. On the bearish end of the spectrum, say regulation stifles growth or adoption just completely stalls out, we're realistically looking at a price between 2 and 10 cents. A moderate scenario, one with steady average ecosystem growth, puts it between 10 and 50 cents. Then you have the bullish scenario. This one is driven by a strong, aggressive crypto run, seeing the price soar between 50 cents and $2. But in an extreme bull scenario, which is highly speculative and assumes Lineia becomes the absolute backbone of decentralized finance, we could actually see prices surging between $2 and $5, or potentially even higher. This naturally brings up what is basically the holy grail psychological milestone in crypto. Can it actually reach $1? It's a super clean, appealing number that pretty much every retail investor dreams of. But what does the source material actually say about the realistic likelihood of hitting it over the next half-decade?
Well, it's certainly within the realm of possibility, but reaching $1 doesn't just happen in a vacuum. Think of it like a steep mountain climb. It strictly depends on rapid, exponential ecosystem expansion, incredibly high daily user activity, and a very strong overall crypto market performance to lift all boats. The text makes it incredibly clear here. Reaching this monumental milestone requires Lineia to not just survive, but absolutely dominate the Layer 2 space during a massive global bull cycle. fueled by immense token and developer adoption.
That brings us to Section 4, the $250 investment test, and those hypothetical returns.
We have our price predictions, so let's actually plug in the math. If we take today's hypothetical entry price of just 1/4 cent, that $250 investment secures you a bag of exactly 100,000 Lineia tokens. So let's take this base block of 100,000 tokens and see exactly how it performs against the scenario analysis we just explored.
Just watch how quickly this math scales. In our worst-case, highly bearish scenario, that $250 still becomes a modest $2,000. Honestly, not bad for a worst-case outcome. If it hits 10 cents, that initial investment is suddenly worth $10,000. At 50 cents, you're looking at $50,000. And if the stars align for that monumental $1 milestone, your initial $250 has seamlessly transformed into a staggering $100,000. If we dare to look at the most optimistic, wildly speculative extreme bull scenario of $5, that original date night money could grow to an incredible $500,000. Absolutely wild to think about.
What we're looking at here is the textbook definition of asymmetric risk in crypto. A really small, carefully calculated initial investment has the raw mathematical potential to multiply 400 times over if the broader ecosystem succeeds. Now, of course, it is vital to loudly state that these numbers are completely hypothetical models, right? They're not guaranteed outcomes in the slightest. However, it perfectly captures and explains the intense gold rush mentality surrounding early Layer 2 networks in their development cycle, which leads us straight into Section 5, risks to consider, and some very important disclaimers.
It's time for the necessary reality check. Lineia isn't operating in a vacuum. It faces absolutely cutthroat competition from existing, massively funded giants like Arbitrum and Optimism. Add to that the looming threat of SEC regulatory changes and the simple, terrifying reality that a single undetected smart contract bug could wipe out millions in an instant. Throw in broad macroeconomic uncertainty and wild crypto market volatility, and it becomes pretty obvious that this space is not for the faint of heart. This analysis is strictly for educational purposes, and you absolutely must always conduct your own research.
I'll leave you with a final thought direct from the source material. While a potential 400x financial upside is mathematically thrilling, will Lineia's underlying technology actually be revolutionary enough to win the Layer 2 wars? Or will a totally new, unforeseen competitor render it completely obsolete by 2029? The tech is certainly here, but the future is totally unwritten. Thanks so much for joining this explainer, and we'll see you next time.